Thank you everyone for joining us for today's webinar on how to fix your credit. We've teamed up with Diana from TD Bank, who was going to be discussing partial of home buying, because that's what this webinar is mainly for, but this is how to fix your credit in order to start buying. So my name is Dolores and I'm with the Bronx Chamber of Commerce. Just so you know, this is recorded and will be posted on YouTube and over our social media platforms. So as we start, I want to introduce Diana of TD Bank. Diana.
Hello, everyone. This is Diana from TD Bank. So I want to tell you about a little bit myself. I have been working with TD Bank for over 10 years already, been helping with the community, develop and growing and achieving that goal that we once at one point in our life. So it's a little bit complicated, but if you have the right information, it will not be as hard as it is. Should I continue or are you going to present?
No, go ahead, continue, and then when you're ready, just introduce.
So, yeah. So as a loan officer, we focus the most on the credit score. That was the first thing that we look into your credit. A lot of people, which they have money, they make good income, but if your credit score is not the right one, you will not be able to qualify for no type of loan. I have sometimes the bad news to tell a customer that when we pull up the credit, their income is good, the pay stub is good, and then when it comes with that time, I let them know, hey, you can't even afford a bicycle right now with the credit score that you have because it's that bad. So a lot of people take it for granted, not having the opportunity. I guess that once they don't need something, they don't focus on it. Because if you don't need your credit, you're not going to focus on it. A lot of customers come and tell me, Diana, I don't need a credit. I don't need to borrow no money from nobody because I got a good income. I got a good salary. That's not the point. We live in a world that most likely your credit score is going to be like your social security. You're going to tell me your credit and we're going to tell you what can you afford and what can you have. We're going to get to that point that in our life, that will be the most important thing that is going to be for us. Basically, the credit score, you can buy a bank, well, not a bank, a car, expensive car, you can buy a house. So it all depends what all your goals are. But if you start early age in your life, and because when you're early in your teen, like sometimes like me, I did it, you messed up your credit a little bit. You're trying to spend money, you got credit, you got a new credit card, you know how to spend it. So it's a little bit hard for people to know how to manage your credit. So for me, as an MLO, the most important thing that we focus on customer is your credit. Your credit depends if you are pre-approved by the bank. And we also weigh your interest rate. Like right now, the interest rate are super low. I did a quote earlier today, and for 700, the credit score, the interest rate was provided was 2.8. But I changed the credit score to 740 and the credit score, the interest was going to be 2.5. So if you notice the difference, it was the same scenario. The only thing that changed was the credit score that it changed. So it is a huge impact in customer to focus on the credit the early they can, to know how to manage the credit. Even if you don't need it, just get a credit card and pay it. Even you need a cash, but soon at one point of your life, you definitely gonna need a credit. So it's good to establish. So I'm gonna transfer now to Quincy. Hopefully I pronounced your name correctly.
Yes, you did. Thank you, and thanks for having me here on the Bronx Chamber, Diana. This is a very important webinar. Getting people to understand the importance of credit has always been a difficult task, especially in the communities that really need to benefit from it. So it's very important that, as myself, having and promoting credit and financial literacy for the past 10 years, I've seen it all, and I found that once you have the credit knowledge and understanding, then sky's the limit. So just a little background on the company, Credit Concepts. We've been servicing the community since 2009, providing credit services that not only identify and educate on how to read and understand credit reports, but to resolve credit issues, because life happens, and something as little as a 30-day late payment can drop your credit score 60 to 100 points. And it's very hard to recover. But when you have that understanding of what your rights are and what things that you can do to, combat that ever changing credit score, the better you are equipped to deal with it. And one thing that you mentioned, what happens is we get proactive. When we, instead of being reactive, we're proactive, where we can make sure that we prepare for when we want that car, that home, or to start that business. You know, you want to be able to be in preparation and have it and not need it, versus need to be in these places and not be able to due to a credit score. So I'm excited today to go over the importance of it, you know, where their credit stands, how to identify it. You're going to kind of get a better understanding of, you know, what are the first things you need to do to tackle it. And if your goal is home buying, because that's what this webinar is about, putting yourself in a position to own, you know, because that's what we want to do. The amount of money that we're paying in rent, we can own. But it starts with positioning your credit score and making sure you have all your T's crossed and your I's dotted, and you can make these credit commitments and goals that you have. So I'm looking forward to today's webinar.
So Quincy, if you can, you have a PowerPoint or?
Yes, so we can get right to it. So 1 second. All right, can we see?
Yes, we can see.
All right, so you know, part of the webinar and what we put together was making sure everybody that registered, because everybody's credit is different. You know, it's like a fingerprint. No one's credit profile is going to be the same. So you can give a generic approach to it, but you have to really dig down and decide, what's my situation like? How are you going to rectify and address my credit issues? And it starts with an analysis of it. We want to make sure we get a full understanding of where we stand. The analysis report is free. So everybody who hasn't already registered, make sure you download the Credit mobile app so we can get your custom analysis report done. And this is what we're going to kind of go over, it exactly what's in the analysis. So that way, when you go online and you register and you receive this, you can really read it with a great understanding. All right. The breakdown is going to be your credit score basics. This is what's going to identify basic credit information. We want to make sure that you're educated. The second is going to be your credit scores in summary. Since your situation is unique, you need to identify what your credit scores and what the breakdown of your credit report consists of. Then we're going to do an analysis of all of your accounts. That's going to help us identify what position each account is in. We're going to give you an overview of what our process is like, what you're going to expect while you go through this potential credit recovery process. And then you're going to know what things that you're obligated to do, because this is not a one-way street. If we're going to meet your credit goals, we got to do this together. There has to be a shift. There has to be a pattern change for you to really understand what's needed and what's to be dedicated to make these credit goals come true. All right. Just to give you an idea on what having a better credit score versus not being in a good credit position. Let's look at person A with a 730 credit score. He goes to get a car. That's a $23,000 vehicle. His interest rate is 1.9. His monthly payments are going to be $368. He's paid less than $1,400 in interest for the life of that car loan because he has good credit. Person with bad credit, their interest rate is 14%. And this is what most people, you want to be approved, but it's better to be approved at low interest rates because you don't want to pay 3 times more than what you get approved for. And rather than take those steps to improve your credit, we get ourselves stuck in these types of deals. Never accept things like this. Make sure that your credit is in better position because you're going to wind up paying almost $10,000 more for the same person versus you not making sure your credit is in good standing. Okay, huge change. So what is a credit score? A credit score, by now we all should know that it's just a numeric number that the credit system has put in place to gauge your credit worthiness. It's very important that they identify by number where your credit stands and what your worthiness is. We all should know that there's 3 credit bureaus: Equifax, Experian, and TransUnion. Those are the 3 bureaus. Those are the big three, is what they call them, and those are where it counts. We have to make sure that your credit is in good standings with each of those bureaus, because each of those bureaus report different information at any time. Now, let's get an understanding of what makes up your credit report. So 35% of it is your payment history. That's how well they gauge where you stand. That's how well they gauge if you're going to be a good on-time payment client. You have your amount that you owe, which is your capacity. The length of credit makes up 15%, new credit 10%, and used credit 10%. Now, this is what overall determines the scoring of a credit report. Very important information to understand. Your behavior is calculated, and the main thing that is looked for is if you're going to pay your bills on time. We know that life happens, and there may be some times where if you do get a late payment, which it does happen, you have to know how to recover. So understanding on the importance of trying to avoid these, but making sure that you recover from these late payments. Credit history. Have you applied for credit? Recent credit inquiries, which is something that most people don't understand. When you shop credit, not knowing what position your credit scores are in, you can run into an issue where you're damaging yourself. So always make sure that wherever you're going to apply for, you get an understanding of what their credit criteria is. Know what their cost is, or know what score is needed to get approved. If you know you don't have that score, then don't apply. You're just going to damage your credit more. Okay, this is just going to give you what the ratings are. And remember, all of this comes with your credit analysis report. All of this education on credit scoring. Now, identifying your score. So here's where you're going to see exactly what your credit scores are. And as you see from this sample profile, these scores are not favorable. A lender is not going to put you in a home position with these credit scores. You want to be at least a 680 and above to start looking at prime interest rates and making sure you're saving tens of thousands potentially over the period of a mortgage loan. It's going to give you a derogatory summary. It's going to let you know all the derogatories that are on potential reports. And I know this may look like a lot, but sometimes your average credit report has a certain amount of derogatories that you may not know is there. If you made mistakes years ago, those mistakes can still blemish your credit report. The analysis is going to give you a breakdown of how many derogatory items that you have. It's going to identify which creditor the analysis is reporting, which bureau is being reported on, and what the issue is. If it's a late payment, it's if 120 days, this will let you know where you stand as far as what the issue is with each item that's reported negatively in your report. And remember, everything counts separately. So if you have one negative, that negative is reported 3 times, you have a total of 3 negatives, which triples the amount of derogatories you could potentially have. Your public record account. So this is what identifies if you have any accounts in public records where certain accounts in your credit report escalated. It turned into the worst case scenario, which is judgments and tax liens. You don't want to ignore these items that could be potentially damaging to your report, especially collection accounts. I know sometimes it's convenient to, if you feel you don't have it, then there's nothing that you can do. But if you don't address these, that at some point they do escalate and they begin to become potentially worse. And it's going to cost you more to get these issues resolved. So we want to make sure that we stay public record free and not have any liens or judgments. And if we do, then there's a separate step to address those issues. Now, these are the inquiries. This section will break down every company that pulled your credit report and when. And remember, anytime you allow a creditor to pull your credit, you could potentially lose 3 to 4 points. Sometimes that's seen more in some cases. So you definitely want to limit the amount of times you're allowing anybody to run your credit. It will identify each bureau that the inquiry is on. It also will break down your credit utilization, and this is important. Lenders, when going for approvals, they want to make sure that your debt to credit ratio is low, or at least in a good standings. So making sure that your credit limit definitely is not exceeding the amount of money that you're owing for each account. So you want to make sure that your ratio is in good standings. You want to stay at a 25 percentage. So don't want to use 25% more than your revolving limits. That's going to definitely impact your score as well. It's going to see your score increase when you're able to keep that debt low. There's a lot of factors that can impact your credit score. And having derogatories and not addressing these issues is some of the biggest ones. When you're enrolling into a program where you're allowing professionals that are aware of some of the ways that you're protected and things that can benefit and resolve some of these credit issues, you're showing that these changes happen, but it does take time. These issues are addressed every 30 to 45 days, which gives the creditor the time to address your credit dispute and to verify and have them challenge whatever items that we're addressing on the report. You're giving a credit utilization summary that will give you a complete breakdown of all of the items that you have on each credit bureau. And then we start our plan of action. Once we identify these issues and understood the direction that we're going to take, we start the process. And the process is making sure that you receive a client portal, which will walk you through the process of understanding where your credit is through our mobile app or through a mobile internet platform. And it will show you that 80% of credit reports have errors, and those errors definitely impact your score. The documentation provided, you're having to upload a secure system where you can monitor and upload those documents securely in your portal. And there's a 5-step process. And this is what is the responsibility once you've identified these issues. And you have a platform that's going to help you and guide you through every step of the way. Log into your client portal so you can see exactly, and you will have that login details sent to your email. There's a 2-minute video that you can watch that walks you through the process. You will upload any secure documentation, your photo ID, utility bill, proof of address. This confirms the information when we're disputing these accounts on your behalf. And these are some things that you can do to speed up the process. You know, while you're taking these changes to improve your credit, you don't want to make sure you're also doing things that can harm it. So you don't want to apply for any credit while you're in the positioning of setting yourself up for this mortgage. You don't want to close any open accounts that are in good standings. The more you close accounts, the lower you could drop your score, and the least option you give lenders of seeing how well that you're positioning yourself credit-wise. You want to make sure your balances of your credit card is below 25% or at least in that range. You don't want to use more than 25% of your credit lines on any accounts that you have open. You always pay your bills on time, and creditors will work with you. Right now, due to COVID, there's a lot of hardship that is being offered and accepted to make sure that these issues don't damage your credit report. So you have to get with your credit providers to make sure, if you know that you may not be able to make a payment on time, then you notify them in advance, and there's some things that they can do to not report any late payments if times get hard. We want to keep an active credit monitoring membership throughout the course of this recovery process. So that way you can have an understanding of how well your credit score is increasing on a monthly basis. This process does take time. Every 30 to 45 days, you can see improvement and changes in your credit report, guaranteed. When you address these issues, whether it be to remove any derogatories that remain on the report or to address any old issues that were there that are lingering, we're going to need that 30 to 45 day time frame to rectify. So I know that's a lot, but you have to really understand how important it is to get that analysis and to get that understanding of where you are in the credit recovery process. And this free credit analysis report we'll give you there will each help everyone identify what their goals are. And we go after this home buying process together at the best credit score possible.
So thank you, Quincy. So one question, I guess, because nobody hasn't submitted any questions yet in the Q&A, but for myself, I have very bad credit, right? So me logging into your account, into your web application, I will be able to see everything. So, you know, where everything went down. And well, I already know my reasoning was for late payments.
Okay.
And then I ended up just stop paying. I ended up just stop paying because I felt like what a lot of people, I guess, don't realize, and I got caught in that, was I was paying the minimum. And you're not supposed to pay the minimum. So what can I do differently to try to fix that? Of course, besides not pay the minimum.
Well, sometimes the minimum requires less the amount down to keep the account in the good standings. That's what really the minimums are for. If times are difficult and you're feeling you can't make those payments, if you at least make the minimum, then it won't put any late payment or bad mark on the report. So always do that versus, because it's not paying the minimum that hurts your credit. It's either not paying it, or if you're increasing your balances with that account. You know, the more credit and the more usage that you have with those credit cards, the more it's going to impact your score. So as long as you're keeping the balances low and at least paying the minimum, or if you want to get it paid off quick, then put more, triple up, put as much as you can down, because the faster you pay it off, the less interest you'll pay, and the closer you'll get, because most people think you have to use your credit to build it. If you have that credit card, don't feel you have to put usage on it to grow your credit. You've already gotten approved for it. It's your account. It's going to build your credit regardless of if you use it or not. So why not?
So I can have a credit card and not use it at all, and it will still bring up my credit score?
Every month, it will report that you're making on-time payments, even when you're making no payments, because you have the account.
Really? I didn't know that.
Yeah, and because you have the account open. And that's what happens. People think that they have to put themselves in debt to define if they're in good credit worthiness. And all you have to do is keep your account open. Now, most lenders do give you a window of when you have to be active, is what they call it. Because you don't want to be inactive. You want to use it at least to keep it open and keep it growing your credit. And they do give you up to 6 months. So if you have a credit card, even if you get some gas, it's considered activity. Put it back up for another 6 months and allow it to grow your credit without the debt. Because the longer you keep it and the closer you keep it at a zero balance, the better it's going to enhance your credit profile.
So since I have bad credit and I want to find a way to fix my credit, besides secure cards, and I know there's different ways, maybe your bank or so, is there other ways to be able to fix that?
Yes, and it's adding positive accounts. So that's the catch-22 that most people find themselves in. If you have bad credit, you make it very hard for me to obtain credit to start rebuilding it again. And the only way to do that is to secure it. And that's where you put up your own money and they give you a credit limit based on what they gave you. And then they'll report that usage to the report. But it's listed as secured, which doesn't really look as good as unsecured. It's kind of frowned upon. And then it requires you to have restraint in your approval. So there are options. We actually provide 2 guaranteed approvals for 2 $5,000 retail store accounts with only a $2.99 activation fee, which is the typical range of a secure card. So if you can benefit from an unsecured account with a very high limit, because $5,000 starting off is a decent limit. That limit can bring and add to your debt to credit ratio, which will increase your score. It will show lenders that you're in the position of being approved for those type of limits. They're store credits, but you don't have to use them for up to 12 months, and it will build your credit.
Okay. So, really quickly, we have one question. Is this slide available for download?
Yes, this mobile app is available on all platforms, iOS and Android, under Credit Concepts, credit with a K, and concepts with a K.
So the slideshow that he showed is just an example of what you get and what you will see when you sign up for the app, correct?
Yes. Oh, I'm sorry, I missed the question. So yeah, so when you do download the app, you do get this custom credit analysis report that will give you a breakdown of your current situation, so that way you know exactly what steps you need to take, whether it be to repair or whether it be to build. At least you'll know what to do.
And this is all free.
Yes, the analysis is free. You will be required to get access to your credit report, which is only $1. We purchased through Identity IQ, who's our credit report provider. You get the report, you get all 3 reports and scores, and then you'll get that custom analysis to let you know what steps you need to take.
Thank you. Somebody asked my mom. Oh, go ahead, Diana.
No, you asked that question first.
Okay, so somebody asked, my mom is looking to purchase this year, but when I pulled her report, her score is in the 700s, but she got some things that I need to be fixed, that needs to be fixed. So I guess the question more is, would she be available to buy?
Well, that's the thing. Having negatives on your account doesn't exclude you from the purchasing, from purchasing a home. It will affect whatever credit minimum that they require, is where you have to be. But there's many ways that you can have a high score, but only have one account on the report. Not every high score guarantees an approval. There may be some things that you have to do to strengthen that score. So it really is just understanding exactly where you are to understand. But if there are things, if you have a score in the 700s and you have something that's damaging your report, is very minute, because you don't typically get high scores like that on top of accounts that are, bringing down your score.
So Anna, for TD Bank, what do you guys accept in order to process loan, to buy?
So for us, the minimum credit score is 620. And like Quincy said, so basically it all depends what's on your credit. Let's say your credit score is 618. We can make an exception because you're only missing 2 points. And most likely you're going to get it within a month or less than that. It depends the cycle. So it's basically, it all depends how you treat your credit. And like you said before, it all depends what's in there as well. Let's say that you only have one late payment on something, you can negotiate. You can say you were sick or something happened. A good explanation can avoid you having a decline, but it all depends. But for TD Bank, the minimum is 620 to get approved for a loan. So I have a question too.
Yeah.
So I want to ask you, because some customer, they don't understand what's the difference, because they see 3 different scores. So can you explain a bit more, like what is 3 different score? Break it down a little bit.
So the 3 different scores are based off of the 3 different credit bureaus, and that's this industry. Credit bureaus are all independent. So the scores that are provided from Equifax, Experian, and TransUnion, they don't work together. So the fact that the scores will vary is because they don't all report the same information. So not every account that you may have, whether present or in the past, has reported to that bureau. Some accounts fall off of some bureaus than the other. So what happens is it's an imbalance of information. So on one credit bureau, you can have 5 or 6 accounts. On other credit bureaus, you can have 8 to 10 from old stuff that never got removed from the report, which makes it different in the scoring, because the scoring is only based on what's either on the report or what's not there. So that's what the fluctuation is. Most companies take a broad issue depending on if they're bringing a different scoring model involved, like FICO, which is an average, and they have their own scoring models. But that's why it can vary, because of the information that's reported on all 3 bureaus.
I also have some question with the customer. They come and think that because they pull up their credit, it's gonna have a hit on their credit report. Can you please explain that part?
Yeah, so there's two
Check my
type of
own credit.
there's two type of hits. There's hits when you are allowing someone to check your credit for an approval purchase or purpose. Those are typically what are the quote unquote hard hits are. When you look at your own credit report, it doesn't do any damage. You know, there are many monitoring sites that provide access to credit reports and scores. It's very competitive. We work with some of the most cost effective and Credible that allow you to see all three of your reports and scores, but being able to understand where your scores are is important.
If I shopping around, I'm sorry that I'm asking you all this
Oh,
question.
bring it on.
No, that's
Bring it
great.
on.
I actually like that.
So when I'm shopping around to different banks, there's a time frame limit, so they only count it as one.
And that's the thing, it really depends on what you're applying for. So typically, if you're applying at multiple institutions, then expect multiple different inquiries on your report. Um, you know, one of the biggest ways that are damaging credit reports, unfortunately, is the car industry. And, you know, not that it's intentional, but when you go get a car loan, they're going to blast your credit report out. You may thinking you're just going into that dealership to apply to this one car company, but they're going to blast that credit report. If it does not have a stellar credit rating, they're going to send that to as many banks as they feel that will give them the approval. And your credit is not taken into consideration, unfortunately. And when you have that multiple back-to-back hits on the report, it will lower your credit rating and make it more difficult to get approvals. So that's why if you're in the market and you're shopping, typically stick with the lender that you're gonna go with and not really shop around. Understand where you want to be at and negotiate that percentage, you know, and you should be okay.
So somebody, Dwayne asks, bad credit, 500s, not much in the bank, less than 2K. What are my possibilities to buying a home this year? That's for you, Diana.
Can you repeat that? So she have, what's the credit score?
Bad credit in the 500s, not much in the bank, less than 2,000. What are my possibilities of buying a home this year?
So I'm not gonna be kind of a little bit negative. You should never give up on that. I think that you should start as soon as possible to fix your credit, work on that. That will be the first, because I think that when you're gonna fix your credit, it's so easy for that credit, like everything. It's so easy for you to go down, even on the stairs. You're gonna hit floor, boop, and you go straight down. But it's so hard for you to go up. And I feel that the credit to build your credit is the one thing that it takes forever to see 1 point go up. But quickly it goes so easy go down. So I think you should start with that, with the income. There's another way that TD Bank can count it. Let's say, for example, you need a cosign. It all depends, because what I always tell the customer, don't reach for something that you cannot afford. You have to be realistic yourself. You cannot buy $500,000 when you really making 30,000 a year. So at least you go to the bank and we let you know how much you qualify, and you can set like a plan and say, you know what, I need to save this money. I need to have this type of money for my down payment. This is where I need to be at. You focus on that, and if you commit to that, you'll be able to do it. But you have to stay focused and real, because a lot of people, they not real to the South, and they create like a whole story in the South. Yeah, I'm gonna do it. No, you have to be realistic and work with your numbers and see your number constantly. Another thing I also tell the customer is that to own your information. Don't let nobody own it for you. Don't tell nobody what's your credit score. Let's say, for example, you tell me what's your credit score. Don't let me pull up your credit. No, my credit score is 750. So you're gonna go to anybody you want to present yourself, asking for a credit inquiry, anything. You tell them your credit instead of them, because our customer, you ask them, when was the last time you checked your credit? I don't know, but I think it's good because I'm paying my bills. but you don't own your information basically, because if you're telling me that you don't know your credit, that means that I have to tell you information about yourself that you don't know. And simple fact that you'll be able to get that once a year for free, a report. So you don't have no excuses because you don't have to pay for that. And at the same time, you'll be able to check constantly on your credit card. So it's something that you have that you own and you don't make yourself responsible for it. But when it's time that you need it, oh my God, I forgot I do have credit, but oh, I never take care of my credit. Now that I need it. Why is that? If you have 5 years. So that person, you can still make it, you can still work it out. There's some agency like this one that they help you with your credit. That's something you'll be able to achieve. It's just a matter of time because nothing happened quick. I
So
hopefully that answered your question.
Dwayne, the same gentleman, asks, do you recommend a zero down when purchasing a home? Likelihood of being approved.
So I think that not putting 20% down, I don't agree too much with that because it's like a big concept. So you're gonna lock a rate, you're gonna get married with a bank for 30 years. And meanwhile, if you put 10% down, 5% down, or 3% as the lowest that you'll be able to pay, then you're gonna get, after you close the loan, you'll be able to put 1,000 or 2,000 to the principal directly. Meanwhile, you are killing the year of the loan. So that would be like a smart move that you would do to be the bank, that instead of you putting all that I have at the beginning and staying broke, meanwhile, I'm like for 30 years for the same payment and the same rate, instead you can do payment after that towards the principal. Not to reduce the payment, but to reduce the life of the loan, which will help you reduce the interest and the payment.
We have a question from Rhonda James. I am rebuilding my credit. How do I attain those credit accounts mentioned to help build it faster? That is for Quincy.
One more time.
I am rebuilding my credit. How do I obtain those store credit accounts mentioned to help build it faster?
Okay. Yeah, you can go on our website, creditconcepts.com, and you can purchase the guaranteed approval accounts for $5,000 each. They're online store credit. They report for 12 months. They do come with a free gift valued at $100 from the shopping store. And those accounts are great starter accounts to help you start to reestablishing and rebuilding your credit again, and without the actual obligation of being forced to have to use it. And it will report for an entire year. And then after the year, it's your option to keep it, which I recommend. You don't want to close something that you've gained so much history, because that's where your power is. Your power is in the length of how long you have your accounts open. So that's the goal. The stronger you and the longer you have your accounts in good standings, the stronger your credit reports are, the better and higher your score is. So you can get those lines of credit at creditconcepts.com or when you download the mobile app.
Rhonda also asks, how will COVID-based financial challenges affect my credit in the long term?
Well, most of the effect has been just, unfortunately, the inability to pay. We've been in a financial crisis, and so many jobs have been lost, and the credit is the first to take its hit. There's a lot of companies that do a lot of waivers and forgiveness programs, but it doesn't really trickle down to the credit reports yet. Yeah, they may put your debt on the back end, or they may defer some accounts from your auto loans or your mortgage loans, but that still didn't resolve, and not enough stopping that waiver of time has reflected on credit reports. So yeah, you're giving me these benefits, but yet you're destroying my credit in the same time. And unfortunately, there is no self-reversal. Don't ever think that improving your credit is going to happen organically or naturally. When you do nothing, nothing will happen with your credit. It will stay in that predicament. Don't assume that after 7 or 14 years that these accounts are going to automatically fall off, that my credit rating is going to shoot through the roof again. You do have rights on when these things can report, but the probability of that happening sounds good, but the reality is it doesn't. And although some may fall off sometimes, you don't want to wait and guarantee that because these things can escalate.
So one question from Destiny asks, does credit concept help remove negatives from someone's credit report?
That's what the process of credit recovery is. That's what we specialize in, being able to identify what these negatives are and just allowing you to open up and challenge these negatives. And you will find that when you challenge the info, sometimes it's not reported right, and that's not your fault. Like we said earlier, 80% of credit reports have errors. So you have been late. Most people are, but it doesn't mean that you stay late. And it doesn't mean that that late payment that you were late 3, 4, 5 a year ago should still impact your credit score. So the recovery is needed. So we address every single thing that's damaging your report.
So one question again regarding negatives is, I have an old negative payments that are 120 days past due, but still show up on my credit report. Will the Fair Credit 906 letter work? I also froze my credit on the alternative places like SageStream, Lexus, Nexus. Does that work in raising your score as well? That's
Yes.
on the chat.
Well, again, there's many tactics and techniques in trying to remove, and some are effective. There is no guaranteed method when the debt hasn't been addressed. There are ways that it could be reported, and there's ways that you can fight these items. But once they are addressed, then you just have to make sure after the removal process, then what? Then what is the strategy to start to rebuild and repair again? And if you have locks and freezes, then it will prevent anyone from checking your credit to give you any type of credit approvals.
So somebody asks, how does your personal credit affect your building your business credit?
It absolutely has no effect because when you build your business credit, you're building an entity, you're building that tax ID or that EIN number, and that comes with the credit profile. That's completely separate from your personal. And that's a big mistake that a lot of business owners make. Almost 90% of business owners don't build out their business credit profile. As owners, they use their personal to grow their business. And that's the biggest mistake that you could potentially make. So it's important to identify that your business has a credit profile. Take the steps to register. We have great business credit programs as well that can take that EIN, build it, and get approvals without having to attach yourself as any personal guarantor.
So what will the long-term effect of COVID challenges impact credit in the next 2 to 3 years?
Say that one more time.
So the question was, what will the long-term effect of COVID challenges impact credit in the next 2 to 3 years?
That's the thing. There's predictions. This credit system hasn't been rocked or wavered since I can remember. I don't think that it's a platform that is going anywhere, despite the direction our country is going in. It's actually will take much more than 2 years to have any major impact or adjustment. But there's theories on all ends. You just want to make sure that you're in the best credit position that you can be in at all times to kind of address and deal with whatever may come.
What are the downfalls of consolidating your credit debt?
I'm not that much of a fan of consolidation because here's what happens. The most average debt consolidation company, the premise is based off of taking all of your debt, which is what the person's biggest problem is, being able to financially manage multiple accounts. So you bundle in all of these accounts, but to get a low payment, which does address all of the issues. But what happens are those issues are addressed to where they're all shut down. So that means that not only do they want you to stop making payments which will escalate each individual account that you're trying to consolidate, which means turning it into a 30-day, a 60-day, a 90, a 120-day. So you're getting these bangs and dents on your credit from multiple accounts, all because you made an agreement to not pay them, let them destroy your credit, pay a small amount over a long period of time. I think if your goal is to have improved credit, that's not the direction you want to take. If your goal is to manage your debt into one lump sum and you don't care what the repercussions are to your credit profile, then go for it. But I think there's better options, and we provide those options like debt settlement. The time frame that it will take you, let's say if you had 5 accounts that you just can't pay anymore, they're collections, you're overwhelmed. What you can do is you can work out individual arrangements. That debt could be 10,000 or something that you think is unmanageable, like 20,000, especially during COVID. And here's what this era has allowed us to benefit from. If you're in $20,000 or $30,000 in debt, that you're in collections, that there have been charge-offs or write-offs, whatever the negative stance is, and you can't pay, lenders are very open to settling that debt for a fraction of the cost. You could potentially settle debt in the 25 and 20,000s for as little as $5,000 to $7,000. Now that number becomes a little bit more manageable, you know? Now the downside is they're gonna want that money up front, because to get a type of a deal like that, you gotta do it up front. So if you are in that type of debt and you are not deciding to try to improve your credit, then just try to put some money to the side. And when you get a few thousand saved up, if you're in that much debt, then go after your creditors and say, hey, listen, this is what I have. And they'll probably take the offer.
So what is better for your credit debt, a consolidation or claiming bankruptcy?
Bankruptcy is the last resort. If you're thinking about bankruptcy, you're just saying you're throwing in the towel to your credit and financial future for a very long time. And there's hypes and theories on, oh, I know people that have filed for bankruptcy and they came back and they did this and got it deleted. Hey, listen, if you want to, there are other routes. You want to be able to exhaust all other options before taking the bankruptcy route. You want to be able to say, I tried credit repair, I tried debt settlement, I tried debt consolidation, I tried everything before you take a bankruptcy route. But my recommendation is debt settlement. Settle each, start one at a time, because the time frame that a consolidation takes, you can save up small increments of money and knock out each account and be done with it in a fraction of a time.
So this question is for Diana. Does TD offer first-time home buyers loans?
Yes, before I go to that question, I'm going to agree to what Quincy said, because a lot of people feel that the bankruptcy is like the easy and quicker way to get out of it. People tend to tell always the good things that happen to them. They're never going to tell you the rough thing, how many people say no to them, even a couple of years, because I have a lot of customers, they're trying to come back and say, you know, I filed bankruptcy a couple of years ago, can I still get a house? And it takes them at least 7 to 8 years for them to really get back on their way up and say you can get a house. So that part is a little bit complicated. And yes, TD Bank does offer a different type of loan, a first-time home buyer loan with a low interest rate, with assistance as well. And as well with the credit score is 620. That's the lowest that we go. But the higher your credit score, the better it is, the better your interest rate, and the better it will be processed. Because every time you have a lower credit, we're gonna ask you a lot of things. Because it's like people tend to not understand what the credit. Basically, it's like if you're gonna ask me to lend you money, but I have never lent you money, you're never gonna know how I'm gonna pay you. So basically, the creditors want to find out how are you gonna pay me when I lend you money. So by looking at reviewing at your credit, that's how I'm going to see. There'll be a reflection of what you've been doing. So that's why, like Quincy said before, the better, the sooner you start building your credit, the better it is, because you become more consecutive customer. And we're gonna look at your profile, we're gonna look at your credit report, because we do review everything what's in it. And you're gonna see, you know, this customer have a few factors. You know, it have been maybe one late payment, but it might be because of something happened. But we are able to provide home buyer first time buyer to customer.
So we have 2 more questions, and I believe these are for Quincy. Can things that fall off from being in collections, having been there for years, reappear? Quincy, you're muted.
Sorry. Falling off the credit doesn't mean your debt magically disappears. And that's what I think the biggest misconception about credit is. When you have debt that is unresolved, be prepared at any time for it to haunt you. There's probabilities that it may not. If you have an account successfully removed from the report, whether it be through a credit program or whether it be through the expiration, it can be sold and it can reappear under a different or new lender. It happens all the time. But again, there's different, time frames with different accounts, and but yes, it can happen.
And last question from Miss V. What is the best way to fix your credit when you have tried everything and you become permanently disabled?
Permanently disabled, I'm not sure I get that part. Disabled on the report, or?
I believe just in general, the person becomes disabled. So then they're not able to, I guess, work.
Oh, okay. Got it. So unfortunately, the accounts that are on the report that may cause it to go bad due to being disabled is not going to prevent the status of your accounts. There are, again, if it's financially related, if the accounts were open, if the accounts were used, if the accounts have outstanding balances that haven't been paid, then a disability doesn't prohibit that debt from damaging your credit report, unfortunately.
Okay, so that is all of the questions that I see here. Is there anything else that maybe you just want to throw out, Diana, mention before we close off the webinar?
I do want to say thank you, Dolores, again, to inviting me to the seminar. Again, I tell everybody to please own your information, get your information, ask for your credit report once a year. Like, I work in a bank and I check my credit once a year, but every month I'm on top of my credit. I'll be looking out in there on my credit card, make sure that nothing that I didn't have a pull or something that is not there that belong to me, I double check, because I don't want somebody to tell me something about me that I should know before them. And that'll be the way that you should. Always check on your credit. If, let's say, you need to build your credit, go to different bank that will provide you some credit, let's say secure credit card. It will be something you have to show because, again, you don't have no credit asking for money. But if you bring your own money, and it will develop at least 6 to 8 months, it will show something of movement on your credit card. And another suggestion is that don't fall for some credit store. They say, like Macy's, other credit stores, that they're going to say, hey, if you apply with us, get 40% off. Yeah, you're going to save 40 now, but then how much you're going to pay them later? So I suggest for you to get like a credit card, like from a bank, that if you decide to go someplace like me to the Dominican Republic, I'll be able to buy my trip with that credit card. So buy something that you can use everywhere, not just in one store only, because they're going to give you the discount. The discount that they're going to offer you in the store, they're taking it up with a high interest rate. Because if you notice, I don't know if you guys know, but Macy's, I used to have a credit card with Macy's, but I used to make the payment and never the payment used to go down. I say, this is ridiculous. So they actually trying to make me believe that I'm saving money at the beginning when I'm doing my purchase. But then when you make the payment, it really go everything to them. So it's like nothing towards the principal. So that's something that you want to check on your credit. If you do have credit card, check what's the interest rate that they're providing to you, and try to use the one that they have more benefit, the one that's going to give you more money back. And if you see that one credit card, it have a high interest rate, try not to use that one, because that one is the one eating all your money, and which is not worth it. So it's like, try to use your credit the best way and wisely way, and check your credit constantly, because you cannot blame nobody for something that you're not doing first. So that will be my message for you guys.
Thank you, Diana. And Quincy, before we let go, one more question is, what can someone who has no credit or has never had any credit cards do to start on building their credit?
Well, again, the only two there's not many options when you're in that scenario. So there's only two. You're either going to get secured accounts where you put up your own money and they'll give you an approval. And most of those school secured accounts come at very low amounts. I mean, you can put up as much money as you want for a secured card. Some banks let you go up to 5,000 or more, just to have that type of limit on a secure card. So that's always one way. Uh-huh.
No, so what is a more common, like, how can someone go about getting a secure? So some, like, let's say, what if Chase doesn't do secure cards anymore? So where would they go?
Well, that's the beauty of the secure card industry. Probably, I would say all of them will allow you or have some type of secured card program to get to your accounts. They're outside of banks. There's limited platforms that allow you to get a card. So it's mostly, banks or online type of credit card approval. So you can research. With the easiest method that I would think is to download Credit Karma's free. It doesn't give you the most accurate credit scores, but what I like about Credit Karma is it gives you up-to-date information, and it does show you what's on your credit. So you can identify what's there, and then what it also does is it puts your approval odds in credit cards there for you. So based off where your credit score is, you could determine on how well you could potentially get approved for certain accounts. And they range you from excellent to good. And I would say search through all the excellent chances of approval and see what are there for you. Even if you have to start at a low limit, it's a start. And then the other option is platforms that allow guaranteed approvals, which we recommend. So if you can find accounts that are unsecured and that you're basically getting your approval based off of your activation or paying for the account, then that's an option as well.
Well, thank you to Quincy and Diana for joining us on this webinar. If you have any questions going forward, you can always email them. It's in the chat, or you can email myself at helpdesk@bronxchamber.org, and I will make sure that Quincy and Diana receives your question, and they will be able to email you with your answers. Again, thank you for joining us today. Enjoy the rest of the night, everyone.
Thank you.
Bye-bye.